right, well, I'll give just a couple more seconds here to kind of let these participants begin filling in. It looks like the numbers are still jumping up right now, so I'll just hold off on introducing ourselves for another couple seconds. All right, and it looks like we're good to go. All right. Well, thank you, everyone. I'd like to welcome everybody into today's webinar, Internal Audit and ERM Priorities, or Enterprise Risk Management Priorities for 2021. My name is Mac Lillard. I'm a supervisor in audit and risk advisories for GRF CPAs Advisors, and I'll be today's moderator. So I'd like to start off today with some quick housekeeping items and explain what you'll need to do in order to earn your CPE credit for today. Participants seeking CPE credit must complete and submit a short evaluation survey that will appear automatically immediately following the webinar. You'll be asked to recall some keywords in order to receive credit, so please write down these CPE words as they're given, as they will not be given again, and you'll need these in order to receive your certificate. If you have any technical questions or issues during the webinar, please use the questions function to speak with our webinar administrators for assistance. The slide deck and recording from today's webinar will also be available for download at the link shown here, and you will also receive a follow-up email with direct links. Technical support and CPE questions may be addressed to Nathan McKelveen at nmckelveen@grfcpa.com.
All right. Thanks, Mac. And thank you all for attending. We are very excited to engage you in a conversation today around internal audit and ERM. But before we start, I just wanted to give a little bit of background about who we are in our firm so that you understand how it relates to today's discussion. Our organization's been around for nearly 40 years. Next year, we will be celebrating our 40th anniversary. And the firm originally started out, like most traditional CPA firms, as a tax practice. And shortly thereafter, we were merged in with Michael Friedman's practice, which is an audit practice. And over time, over the past 39 years, we have grown the audit practice to represent now about 70% of our entire firm's business. And nearly 100% of that audit practice is not-for-profit. And those not-for-profits are a variety of different types, including private foundations, community-based organizations, trade associations, national charities, and international non-governmental organizations, NGOs. At the moment, we're around 115 people, primarily based in Washington, D.C., but we also have a New York office and New York staff. Our audit department does, as I mentioned, represent the largest majority of what we do, our firm business. And included in there, there's an employee benefit plan practice as well, an audit practice underneath that department. And included in our audit department is an exempt or tax practice. So our focus there is not-for-profit organizations, 100% not-for-profit. There's about 1,000 Form 990 returns that are prepared on an annual basis. And our not-for-profit tax group also works with clients for different reasons, including tax optimization, IRS representation, and other consulting engagements. We also have a tax department that's focused on everything that's not to do with not-for-profit, including individual, corporate, international organizations. We also have litigation support, estates and trust valuation services, and other services that department is providing to clients. Our outsourced advisory and accounting department does have a variety of engagements that are along the lines of external controllership, payroll, bookkeeping, write-up, tax planning. We're also an intact implementation entity, and they also provide a variety of other accounting and advisory services. Our most recently created division, our Risk and Advisory Services division, provides a variety of services, including internal audit. There are cybersecurity engagements, third-party risk reviews, GDPR, other privacy engagements, financial systems optimization, enterprise risk management, and a whole suite of other services. Recently, we've partnered with NC State's School College of Management ERM Institute in an effort to bring ERM to as many not-for-profits as possible. Our first joint conference was held last fall. in person down in NC State. And this year, because due to COVID, we switched to a 3-part series, providing, again, ERM training to not-for-profit organizations. And if you're interested, please access our website for those details. With the experience that we have working with not-for-profit organizations domestically and around the globe, and through the services provided by our risk and advisory services team, we are focused on risk, and we are sharing our experiences with you and as we do on an ongoing basis with clients and others. And through our international experience in our audit department and through our risk and advisory services practice, we've traveled to over 110 countries to perform local site visits and other monitoring, sub-grantee monitoring engagements. And we've seen how different organizations operate and how they manage risk. We also, share our knowledge and experiences through publications, seminars, webinars such as today, and other communications, all of which are available on our website. So please don't ever hesitate to access our site for those resources. Business continuity and enterprise resilience have been very hot topics, very obviously and clearly through the past 8 months experience through COVID. Developing enterprise resilience plans amongst other technology solutions are really a top priority for all organizations. We've helped clients see and identify risk, and we are helping them address their top needs through a variety of different solutions. One more thing, just before I forget to mention, if there are topic areas that you're interested in, again, today we're covering internal audit and ERM, please insert those in the chat box so that we can make sure that we deliver as much relevant content to you in the future. Quick second on me, I've been with my company with GRF CPAs Advisors for 25 years. I'm a partner in our audit department. I've been a partner since 2006. I work with primarily international organizations, but do work with a whole host of other types of not-for-profit organizations. I'm also very active in help growing our risk and advisory services department. I've been to 50 countries over those 25 years, many of which are repeat trips, but of course, in the last 8 months, I've been absolutely nowhere. But I'm also active on several boards and present a variety of different topics, including today's subject matter in today's presentation. But again, these days, mostly webinar based. The next slide, the agenda. So the agenda here, we're breaking this down into 4 different pieces. The first area, the need for better risk oversight, will be presented by Melissa. The next area will be presented insurance considerations by Mike Kelly, and then the internal audit plan insights will be presented by Wayne. And then we'll also have a section here on next steps all the way at the end of our presentation. This is a very interesting statement here by the Institute of Internal Auditors. I'm just going to read it. Establishing a professional internal audit activity should be a governance requirement for all organizations. This is not only important for larger and medium-sized organizations, but it also may be equally important for smaller entities, as they face equally complex environments with less formal, robust organizational structure to ensure the effectiveness of its governance and risk management processes. And simply what this is saying here is that internal audit does in fact not only apply to large organizations, it applies to everyone, even small organizations. You don't think that you are big enough for an internal audit function, but every organization should be thinking about internal audit and enterprise risk management. All right, over to you, Melissa.
Yeah, and I think Mac's gonna walk us through the poll here will come up. What is your organization's current state of internal audit? Or marketing, we'll pop that up there. Okay, here we go. No, I guess I'll go ahead and take it, Mac. No internal audit process in place. Yes, internal audits are conducted annually or currently investigating the concept of internal audit, but have made no decisions yet or unknown.
Right. And while everyone just takes a minute to answer, I do just want to go ahead and provide that first key CPE word. So the first CPE word is system. So again, if you're looking to receive CPE credit, please jot this word down as you'll need it for the survey following the webinar. Again, that first CPE word is system, S-Y-S-T-E-M.
Okay, great. Well, it looks like 41% saying yes, we do have internal audits being conducted annually, and that's 41%, and then 31% no. So we have kind of a mixed bag here today. So that's great. We're going to make sure and address everyone participating today. So thank you for sharing that with us. That gives us some important information that we'll need. So going on to the next slides here, understanding the need for better risk oversight. Again, my name is Melissa Musser. I'm principal of Risk Advisory Services at GRF. And really under that umbrella is cybersecurity. We have internal audit and enterprise risk management. So that's really what my group oversees. It's an awesome team, by the way. And I'm very passionate about helping organizations. And we like to try to communicate things as simply as possible. And when we do help our clients, we like to take a risk-based approach. We do not like a cookie cutter approach. So as you can tell, we're a very excited team. Please submit questions or reach out to us, connect with us on LinkedIn. We're here to help. But obviously, you know, the world is a very complicated place. It was before COVID, and, you know, it's definitely shown us that just about anything can happen at any time. And there are so many risks right now in the world, and organizations can be very, very overwhelmed. And so what we're trying to do today is to help you develop a plan for 2021. You obviously can't look at everything. So we want to help you come up with a methodology to, you know, look at the right risks. How, you know, obviously you don't have a crystal ball. It's hard to know exactly what to focus on. So enterprise risk management in conjunction with internal audit. I know the risk assessment process is largely similar, but what we want to do is help you come up with what are, let's say, for example, the top 3 risks of the organization, and really come up with some cohesion and get everybody on the same page. And at the organization, truly, what are our top risks? So when your board asks, you're able to say, these are what they are. And this was our methodology for coming up with it. Go ahead to the next slide. All right, so here are some good frameworks. So there's ISO and as well as COSO. These are both enterprise risk management frameworks. The reason why I'm pointing this out is because both of these were revamped. I think it was like 2017, 2018, to say the focus of enterprise risk management and really your risk assessments overall should be on strategy. And I think, you know, really that was always there, but we really kind of missed the boat. And I've been in the profession for a long time, and I have to admit that really wasn't where we were pulling back to. Was, you know, and we always like to use, and I know if you've seen our webinars before, I always like to give the example of Blockbuster. Blockbuster had risk management in place, did not have the right strategy. And I really feel like there is an inverse relationship between having the right strategy and focusing on the right risks. You know, if you do a really good risk assessment, you're going to likely see if your strategy is pointing you in the wrong direction. And so that's kind of what we want to bring together and help focus. In addition to that, you know, the IIA has revamped their, what was once known as the 3 lines of defense. And now they're saying, you know, we're no longer about defense. We want to be proactive. And that really kind of goes right in line with the revision of focusing on strategy. And one of the things we really focus on in enterprise risk management is forming management level risk councils. We're trying to move away from having the compliance and risk function be on an island all in and of itself, although that is very important. And I'm not saying to get rid of those roles, but we really need to pull management in some capacity, possibly through a risk council. And this is kind of what they're trying to say is the second line of defense, or the second line now, not defense, but the second line really isn't like its own compliance function, but really it's management. Management is responsible for risk. And, you know, and if you've listened to some other of our webinars before, we're even going as far as this, because sometimes when we ask management to serve on a, let's say, risk council, they'll be like, that's not my job. That's not my job description. You know, that's so-and-so's job. And we're really trying to work. And you could see the IIA is as well as to say, no, risk management is everyone's job. So really just trying to get everyone on board. So just wanted to give you some background there and why things are shifting. So if you already have internal audit and ERM in place, you likely have a little bit of work to do to change the culture and context. If you're just now implementing, great. Strategy and collaboration and management owning risk needs to be at the center of that. All right, so, you know, our goal today is to help you figure out what do we want to focus on in 2021. And, you know, executing a good risk assessment, focusing on the right risks, because you could spend a lot of time hammering something when maybe you should have been spending that time on something else. So we want to try to help you figure out how do you hone in on that, spend the right time. Maybe you have internal audit, but maybe your internal audit function's been kind of doing the same types of audits over and over again, and that's great. They're probably adding a ton of value doing that, but could they also be doing something more proactive, right? Not just defensive, but what can we do more proactive? You have to look at your organization's context to figure that out. You can't just take someone else's, audit program. We're going to give you some ideas on things you can do, but ultimately, we're not going to be giving you, hey, here's your audit program for next year. You're going to have to really look at yourself and figure out what could go wrong and what do we want to try to address and where do we want to go. But you really need to look at your organization's context to get there. This is a nice graph we got from NC State. As Andrea said, we work closely with them in developing things that are really specifically tailored to the nonprofit industry. And I think this is a really good example. As you can see, risk number 4 here is affecting every single strategic initiative that they have. When you lay things out for management, so what we want to do when we do enterprise risk management or we do internal audits is really we want to provide information to management so that they can make decisions. So the easiest way that we can convey that information, the better, right? If I'm going to give you a 200-page report that no one can read and understand, and I'm just more freaked out than ever, that's not the point, right? We want to try to say, you know what? You only have so much money. You only have so much time in the day. Really, you need to focus on risk number 4 here and whatever that risk may be. And let's try to put some more energy into it this year. And by the end of that year, hopefully you've made some progress and now we can maybe move on to the next risk. And so it kind of gives you a methodology to really start to work through and make some changes, because a lot of times organizations know what their top risks are. They're just stuck in the mud or they got their head in the sand and they're not able to move forward because they don't even know where to start. Sometimes, our clients will say, hey, take a look at our risk register. And we'll take a look at it. And right off the bat, we'll see that, they're missing some things. Maybe they haven't done a risk refresh in a while, or maybe they haven't, looked at their strategic objectives. So if you do have a risk register, maybe let's take another look through. Really, you should do something annually every year, or anytime there's a significant event like COVID. Redo your risk assessment. So objectives based is, okay, what are the risks to our strategies? What are some events that have happened? Process flow analysis, scenario based, you get it. Update that, do some of the exercises and get it into your risk inventory. And you'll want to update your risk inventory every year. Pre-COVID risk inventory is probably a lot different than post-COVID inventory. So you want to keep updating it. Another way for us to tell if your risk inventory or universe, as we like to call it, is possibly missing some holes is by looking at it in categories. So maybe you're missing a third-party category, or maybe you're missing an environmental health and safety category. So put them in these buckets, line them up, sort them that way, and that's a good way for you to tell if you're maybe missing something. Because we want to make sure, if you're anything like us, being an auditor, you want to make sure what you're starting with is complete and accurate before you can really make any decisions. So let's make sure we have the right risk universe before we develop our internal audit plan. All right, so some of the things we really like to recommend: you do your risk assessment, you come up with your top 3, develop a risk council, come up with handling plans for your top 3 risks at least, right? And then so that's kind of enterprise risk management, and management owns those risks. Internal audit can come in and obviously they can help with the plan. Maybe they can do more than just the top 3. You can come up with a 3-year plan and you can get some really good coverage. We're going to talk to you about how to do that. But also internal audit can provide assurance on those management handling plans. Management's going to be reporting to you, okay, we've implemented this mitigation, we're doing this, we're doing that. And you're going to say, okay, great, management. Well, internal audit's going to come in and, just kind of check and see what you're doing and report back to us on whether it's adequate or not, so that you can see that there's some levels there and some independence assurance being provided. And internal audit can also look at your strategy and your strategic objectives to say, hey, maybe you're missing this, or maybe you should look at that. I think that's another important inner way that these 2 different types of risk functions can work together. I think this next here, I'm going to turn it over to Andreas. Is talking to boards all the time. So he's going to give us some insight as to how those conversations go with boards when they're talking about risk oversight.
Yes, thank you, Melissa. And there's a lot of discussions that we have with boards just in the context of presenting audit materials and other letters and recommendations that come out of our process. But there are specific questions that that need to be asked, and if they're not happening throughout the year, then certainly by the end of the year, when financial results are compiled together and presented by the auditor, there are questions that we ask simply because it's as a matter of best practice and as a matter of identifying risk. Certainly they're very important, but The main question here is the board oversight adequate? And, there's some points here. I ask these questions all the time. What keeps us up at night? What does the audit committee charter say about risk oversight? Is there anything specific in there that talks about how often they need to have conversations about risk? Is the board properly structured? Do we have the right people on the bus? And do they really understand not just the financial elements or the affairs of the organization, but do they also understand the other risks that are out there? Are they aware of what's happening in the industry, in the world? Are we actively discussing the financial affairs of the organization? Certainly that is very important from an accounting and auditing and financial management perspective. What other hidden risks or vulnerabilities out there? And specifically, what are the risks to our vision and our strategy? And those aren't conversations that regularly happen, at least from what we've seen, but more and more, again, especially as we're talking about a COVID period here where people are starting to ask a lot of questions about the organization, the future and the sustainability and of the organization, their ability to be resilient when the next pandemic or other disaster occurs. What is the risk to our vision and strategy? Is our management team communicating to us? Do we have an active line of communication, in a regular line of communication between our management team and our board? We've seen that the communications, and hopefully during this period, the last 8 or 9 months, that management is communicating more regularly with those charged with governance and specific to risks that have been identified during this period and unfortunate events that may have happened. And then the last question here, we properly insured. Auditors really don't talk about insurance with boards. We do. We certainly think insurance is important. One of the most important things that we've been advising clients in the last couple of years is about cyber liability coverage. And we've seen in the last 8 months, there have been a lot of breaches that have happened due to the increase in cyber attacks since we're all working remotely. The better the organization can manage the risk, the better position it'll be in. And the better the organization will be as far as insurability is concerned. And the bottom line is that there are impacts that on the terms, conditions, and pricing related to insurance that the organization should be considering. And then depending on that, the organization will mitigate cost increases. And so, and again, I am not an insurance expert. I think, the next presenter, Mike Kelly, is an insurance expert, and I will turn it over to him to talk to you about insurance.
Thank you, Andreas. And I'd like to thank GRF CPAs for inviting me to be a participant today. A little background on me, Mike Kelly. I'm a shareholder with AHT Insurance and a risk advisor. I've been with AHT for about 10 years, and I focus 90% of what I do on nonprofit and NGOs, international development, et cetera. AHT's nonprofit practice has over 1,000 nonprofit clients. And if GRA is going to be 40 next year, we're going to be 100 years old next year. So independently owned and employee owned as well. So I'm very happy to be here and spend some time with you. So this is our poll question. When was the last time your organization's insurance program was audited? This year, last 3 years, we've never done one, or I don't know, insurance just sits off in the corner over there somewhere and nobody pays attention to it. Be honest, everyone.
All right, now while everyone takes a minute to answer that, I would like to just give everybody the second CPE word for the day. The second CPE word is market. So again, if you'd like to receive CPE credit, please jot this down as it's not going to be given again. That second CPE word again is market, M-A-R-K-E-T.
So we've got a fairly dispersion that insurance programs audited in the last 3 years. That's about a third of the group. And then we've never done an insurance audit, which I expected to be the number one answer, and unsure. So that is that's telling. I think we can move on. So before we dive into insurance specifics, for everyone that's not an insurance nerd like me, you may not actually know what's going on in the market. The insurance market is doing something it hasn't done in the last 20 years. In insurance, we have hard markets and soft markets. Soft markets means insurance coverage is profitable for insurers. Rates are actually dropping because they're willing to sacrifice profitability to increase market share. Coverage is easy to obtain. It's good for clients, it's good for insurers. So for the last 18 years, we've been in a soft market. At the end of the year last year, that started to change, and we start to enter what's called a hard market. As you can imagine, insurance coverage is harder to obtain. Insurers are not profitable, so they're curtailing terms and conditions, and pricing is increasing. Now, at the end of the year last year, due to things like catastrophe losses, hurricanes and things like that, the Me Too movement, and a variety of other things, insurers actually started losing money, so rates started to increase. And then bam, COVID-19 hits, and the insurers have absolutely no idea what's going on. And so knee-jerk reaction, they start canceling policies and drastically increasing rates. And so the graph on your left shows you really the last market cycle. The high point on the graph on the left was just after 9/11, when we hit our last hard market, which was basically a 30% rate increase overnight. Now, if you look at the right side of that graph, at the end of Q1 this year, we were at a 10% rate increase. But then again, if you look at the next graph, this is management liability and or directors and officers premium only, that it's seen almost an 18% cost increase this year alone. So for the first time in a really long time, insurance is getting a lot more scrutiny because the rates are increasing so drastically. We can go to the next slide. And why? And then this is what I just brought up. COVID-19 is creating a gigantic amount of uncertainty. You can see that the top thing that's been impacted the most is availability of coverage. And many of you may have gone through this 6 or 7 months ago. You can see that event cancellation and business interruption are two of the coverages that were most impacted, because organizations, particularly nonprofits, had to reschedule, cancel events, et cetera. And then many of them were claiming a loss of revenues, which was business interruption as well. So we're kind of entering a new era and phase in insurance for the insurers, but also many organizations as well. And so we're very much in the unknown as it pertains to the insurance market right now. We can go to the next slide. So trends, what's actually happening? Well, I just mentioned both of these. The top box is rates are going up, coverage is harder to get. You're getting a lot more underwriter scrutiny. What does that mean? In addition to the 4,000-page application that they want you to complete every year, they're going to send a 3,000-page supplemental, then 19 questions that they want you to sign in blood in order to get your quotation. So there's that, which the already cumbersome process got way more difficult. The other area is the types of claims that nonprofits and international development organizations are being hit with. And Andreas brought this up before. Everybody says cyber liability. And the problem there is, what is cyber? Is it a breach? Is it a loss of data? Is it your systems getting compromised? And it's so incredibly broad. I can tell you in particular, the type of claim that I'm really afraid of for a nonprofit is ransomware and or service interruption. And most of you know about the case of the city of Baltimore within the last year. They were hit with a ransomware attack, and a $750,000 ransom was demanded. They didn't pay it. Then after a week, they caved because they had to, because they were losing revenues. They could do absolutely nothing. And that's the type of thing that I'm really, really concerned about for an organization. The other is social engineering. And I'll give our international development brethren a great example here. A client of mine up in New York that was working with a local partner in Haiti. A bad actor actually just assumed the identity of this partner in Haiti, sent false banking instructions, and the organization wired $300,000 to a bank account in Mexico. The funds weren't recovered. And so, we all chuckle about the Nigerian prince emails that you get personally that needs $5,000 from 20 years ago. These attacks now are becoming increasingly complex, increasingly sophisticated, and insurers are paying them. And so those are really the types of things that I'm concerned about when it comes to cyber, and that very much crosses over with crime as well. Because the last example I gave about the $300,000, that could be funds transfer fraud, that could be social engineering. Either way, those are the examples, that the types of claims that the community is getting hit with. And then the other one, the last one there, employment practices liability. This is nothing new. And for those of you who aren't familiar with the term, this is insurance related to hiring practices, hiring, firing, discrimination, anything that could fall broadly under the guise of someone gets fired, someone is terminated, or someone leaves and they claim discrimination or harassment. And the reason these claims have always been a nuisance, the problem is what we have something called social inflation going on, which is where a nuisance lawsuit used to settle for $50,000, it now settles for $100,000. So especially in highly compensated white collar individuals know that they can file a spurious lawsuit and the insurer might force the organization to settle it for $75,000. That's really, really attractive to lots of organizations. And so these are some of the specific areas where your peer group is experiencing claims activity that's becoming quite difficult. We can go to the next slide. And so this whole topic of auditing the insurance program came up, and that's why I love working with the auditors and the ERM folks, because most organizations have some sort of risk counsel, risk function, some sort of internal audit function. The thing that we found is that many either overlook the insurance entirely, or the insurance is kind of just held in its own separate vacuum. And when you're auditing individual risks, such as cyber, if something goes really wrong, you're going to want some sort of financial risk transfer, i.e. insurance there to make sure that there might be some sort of recovery. And the problem, especially with business insurance, is almost no one wants it. It's like it's an additional responsibility for someone else. It's a big budgetary item. It's a big pain, huge administration. So oftentimes it either gets passed around the organization or almost gets overlooked entirely and just gets renewed every single year to reduce the administrative burden without really scrutinizing it. And so really, we recommend you need to comprehensively go through your insurance program at least once every 3 years with your broker. What does go through? Great question. How can you successfully audit insurance? Do you need to be an SME? Not necessarily. That's what your insurance broker should be doing for you. Many insurance brokers unfortunately have gotten lazy and simply transact insurance. They're there to collect your premium and bind a policy. Really what they should be doing is they should be going through all of your policies and saying, hey, this is what you have now. Based on your peer group, these are some particular areas that you might want to look into. And the other thing they should be doing is they should be taking your program out to market at least once every 3 years. What does out to market mean? Me as an independent insurance broker, we represent 75 different insurers. And let's just say 15 or so of them are a good fit for our nonprofit clients. That means I should be going out to the likes of Chubb, CNA, Travelers, and Hartford at least once every 3 years and saying, first, what's your best rate? But then give me your best in class terms, conditions, and pricing. And oh, by the way, my client's concerned about cyber and employment practices and directors and officers insurance. So what specific coverage grants can you give me there that would be germane for a nonprofit? And so from the organizational perspective, almost everyone on this webinar already has a broker. It's just and the broker's probably, from your perspective, being compensated about 15% of your total premium. I encourage you to make your broker earn the 15% of the premium and not just transact insurance on your behalf. Now, if you wanted to get an independent perspective, you could theoretically go out and talk to another broker. That being said, that other broker you're talking to is probably going to tell you whatever they think you want to hear in order to hire them instead of your existing broker. So that's one way to go about it. There are independent insurance consultants. The best known for this community, and many of you may be aware, is the Nonprofit Risk Management Center in Leesburg, which is half a block from our office in Leesburg. They do a lot of this work, and they're a great resource. You can check them out, and if anybody would like to, I can connect you with their executive director, Melanie Herman. They're a great resource for this. But the other thing too is to Melissa's point, you have these internal audit functions, and you may have a risk council, a risk committee, etc. And you may already have the capacity internally to do part of this yourself without actually being an insurance SME. I think just having insurance on the list as an item that you would potentially audit is the biggest task in and of itself, because that way at least it'll get some attention and you can identify the appropriate resources to allocate towards it as well. And I would be remiss, as one of my colleagues pointed out, that your existing providers might be able to provide an insurance audit as well. Like GRF does insurance audits, and there's a variety of other resources out there where you can get an independent insurance audit. Well, I think I just talked 10 minutes straight and nuance about insurance, so I'll stop there. If anybody else wants to get more nerdy, just send me a message, or we'll schedule a conversation, and I'd be happy to go on further. Thank you again, everyone, for being here, and thanks, GRF.
Okay, now we're gonna be, and thank you, Mike. You're awesome as always and a great resource, and we love having you as part of our team. So we're gonna move on to internal audit plan insights, and I think we have a polling question. Okay, so I know some of you don't have an internal audit department, but one of the questions was here we wanted to ask was, do you then, if you have one, do you execute an annual internal audit plan? Do you put something together, you write it down, get it approved, and do you execute it? Yes, no, looking into the concept, unsure.
All right, and while everybody takes a second to answer that question, I will provide the third CPE word of the day. So again, if you'd like to receive CPE, please jot down this word. It will not be given again, but you will need this to complete the survey and earn your CPE credit. The third CPE word is control, C-O-N-T-R-O-L. Again, that's control.
Okay, great. Yep, look, split again, like pretty much 50-50 on those who have internal audit departments and don't. And so we're going to help you through this process here. So we're going to have Wayne talk to you a little bit about how he audits his affiliates. Mac's going to jump in kind of quickly, and he's going to talk a little bit about how you can go through if you have, international sites, how to do kind of, different types of risk-based audits on those sites. I know we don't have a ton of time, but I'm going to wrap it up with trying to talk a little bit about how you develop an internal audit plan. There was a question about how a small nonprofit would be able to execute an internal audit plan, and can do that. So we're going to talk about that as well before we wrap up. Sure. I'll turn it over to Wayne. Wayne, take it from here.
Thanks so very much, Melissa. And thanks for inviting me once again. Greetings, everyone. My name is Wayne Rock, and I serve as Vice President of Regional Affiliate Operations for the National Urban League. Melissa asked that I give you a brief overview of how we oversee our affiliates across the nation. First, let me again thank Melissa for delivering a great enterprise risk management presentation to our CFOs a few weeks ago. Thanks so very much. They were all enlightened, and we look forward to doing that again. A little bit about the NUL, and I see one of my colleagues, former colleagues, is on this call. So, but we are a nonpartisan historic civil rights organization that advocates for economic and social justice for African Americans. And against racial discrimination in the United States of America. We do so through a network of 90 affiliates located in 36 states in the District of Columbia, and from our national office in New York City. We also have a national or Washington bureau. In terms of our structure, The 90 affiliates that I referred to are all separate 501c3s and are linked to the national office through an agreement that requires that we provide oversight over their operations, even as they are autonomous. This agreement defines the mutual terms and conditions for affiliation, but gives us great leverage to protect the brand, obviously. To ensure that the affiliate maintains certain financial reporting guidelines, and certainly amongst other things, even down to involving the NUL in selecting the CEO. So that's the structure, and that's a little bit about the NUL. Obviously, we still make sure that the affiliate is the one who makes the final decision about who that CEO is to be. So part of separation of entities there is they're all separate 501c3s. Our mechanism for oversight is pretty much threefold. And it's more compliance and internal review than certainly internal audit, but certainly we have some facets of internal audit within it. The first part being a desk review. All of our affiliates are required to submit monthly financials to us, quarterly, their 941s and the like, as well as their annual audits and tax returns. And certainly we require that they do that within a specific time frame through a national database that we have established. So one, it kind of forces them to do the work of creating financial statements, and two, getting their tax returns in and the like. Certainly, we scrub those, we review those on a monthly, quarterly, annual basis, and certainly then have conversations with the respective affiliates as to where we see deficiencies. The second type of review that we do is certainly just a regular emergency site visit. Our affiliates range from about 100,000 to 45 million. And certainly they have small accounting staff. So you can see the need for us to really press on internal controls. Or one of the things that we do, obviously, is to engage some of our board members and other volunteers to mitigate the risk that comes with the lack of segregation of duties and the like. So that is that type of site visit, which we do mean on an ongoing basis and as they come up. But then the one that I wanted to talk about more was the our performance assessment type site visit that's mandated by the agreement that I talked about previously, and that we do at our affiliates no less than once every 3 years. So it's a programmatic management and administrative type audit that we do with each of those affiliates. The performance assessment, and I'm not sure who we have on the call in terms of types of not-for-profits, but certainly I would recommend, even if you're a single office not-for-profit, that this could be used and should be used, as we recommend that we think that completing, my apologies, a self-assessment of your operation is a best practice. And so when you see some of the standards, and I won't go through all of them, as they're about 130 standards in the tool that we use, almost equally divided between the areas of governance, financial operations, and program operations. I won't dig too deep into the governance piece and the and the program operations. But I believe that ensuring good standards in government and program operation certainly enhances the fiscal piece. In the government's piece, obviously, part of the assessment talks about bylaws and the components of and all of this, by the way, is based on best practices in the not-for-profit area. All 130, 120, 130 standards in the tool. But certainly some of the examples would be the components of your bylaws. Addressing the number and the minimum number of members that you should have on your board, what the quorum is, what the terms are, ways to remove board members. As it relates to minutes, are your minutes signed and approved? As it relates to the organization compliant with local, state, and federal laws, do you have policies and procedures that are written? And certainly we look at the strategic plan, or this tool forces us to look at the strategic plan of the affiliates, and oftentimes there may not even be an active strategic plan. But certainly that we go through, or this tool requires that we go through and look at the components of that strategic plan. Are there objectives? Are there measurable goals? Are there timelines? And the whole bit. And correspondingly, as it relates to the program administration piece, certainly are there standards and procedures as it relates to intake? Areas that that address ensuring the integrity and safeguard of client information? Are there written program designs that are with measurable goals and objectives? Is there an implementation plan? And so we take the affiliates through this tool towards for governance and program operations. But certainly the piece that I kind of look at mostly is the fiscal management piece. And again, there are about 40 standards that also apply to the fiscal management piece under the areas of human resources and personnel, fundraising, fiscal processes, internal controls, fiscal policies and procedures, endowments, and corporate goals, which speaks to whether or not the board has developed goals that give direction to the work of the affiliate. In other words, has the board passed a strategic plan? But in the areas of human resource and personnel management, it may be, and again, the best practices that we look for in this, to go along with this too, is that these documents are updated at least every 3 years. And that's one of the things that we're looking for as we go through. Certainly, policies and personnel manuals, accounting manuals, volunteer manuals, whatever the kind of manual that you have, this should be updated at least once every 3 years. We do a bit on personnel further, I mean, ensuring that their benefits for staff, their job descriptions are current, their evaluations, that personnel files include all of the necessary and proper documents that should be there. From a fundraising perspective, is there fundraising, a fund development strategy that has been completed with board approval? Fiscal, down to are you running the current version of the software that you're supposed to have? Our financial statements prepared.
And Wayne, I wanted to jump in here. I think we forgot to say, you know, you have so much information to share. I don't know if you mentioned that you want to, that any of us are available to talk to afterwards. And I know we're kind of running a little bit short on time, and I want to make sure that I get to some of the people's questions at the end. I didn't mean to cut you off there, but
not at all, not at all.
You have such a huge resource of information and some ideas that like our participants can leverage in developing their plans. but I'm going to turn it over to Mac really quick because he's
Sure.
got an international NGO perspective. And then I'm going to try to wrap it all up with, okay, so then how do we actually take all these different ideas and put them into place for a really good, concise 2021 plan?
Sure.
All right, thanks, Wayne.
If I may just say that, I think whatever, all the things that we do for these affiliates is obviously towards reducing the risk and liability, right? So I would certainly encourage all of those who are represented on the call to at least take a look at the at doing a self-assessment for their affiliates. And
Well,
certainly
that's exactly what I was gonna, someone asked the question about a small nonprofit. And my answer is to them, I go ahead and say one part of it is like a self-assessment. Like you don't need an internal audit department. You can identify someone to execute certain procedures and report out. So you can have someone wear multiple hats. A board member can come in and do a self-assessment. You don't necessarily need that independence, though it is preferred in a lot of cases, and you can do that. But a self-assessment model like you're talking about is how you kind of solve that problem.
At least start there.
Yep.
Thank you so very much.
Oh, thank you, Wayne. And Mac, I don't know, Mac, we got to work on some international NGOs this year. We got to do some site visits. We were supposed to go to the Philippines. We were supposed to go to Colombia, didn't get to go. We had to do some remote audits. But I want to share with people how, we don't really do, so we had multiple sites that we had to go, do some, different internal audit on, all same organization, but we took a different approach for each one instead of doing a cookie cutter engagement. Mac, if you wanted to maybe share a little bit about how we did that.
Yeah, and I apologize, but I'm gonna kind of speed through this slide just in an effort to conserve some time. But please, anybody feel free to reach out to me after this if you have any questions that you'd like me to answer. So yeah, as Melissa said, we have had a lot of clients that we do these internal audits for international NGOs that have various field offices all over the world. An internal audit isn't too much different from an external audit in the fact that, the planning process is going to be relatively similar. The information gathering stages, where you're discussing with management the key processes, the high risk areas, and then obviously from those discussions, from that review of policies or procedures or any other sort of administrative documents, you're going to come up with your risk assessment in order to base your internal audit procedures over. And again, based on the budget, based on the timing constraints, you're obviously going to want to focus your attention to those high risk areas, while also making sure that you're not completely ignoring something just because of its level of materiality. You do ultimately, at some point, want to touch every key process. And I did see that there was a question on virtual versus on-site internal audits that I did just want to address. As Melissa again did say, we had trips planned to the Philippines, to Colombia for one of our clients, and we did ultimately get forced to have to do these virtually because of travel restrictions and the COVID-19 pandemic. But I think it was eye-opening for both us as well as our client about how efficiently and how well we were able to run this engagement virtually versus on-site. So going forward, I think that this is going to be something we see a huge increase in. Organizations that thought maybe they weren't able to do an internal audit for one of their remote field offices due to just the cost of getting there, whatever it might be, that's no longer a restriction. You can still do these virtually and gets an extremely high amount of value out of it. So I think that's one of it's weird to think of positive things that came out of the pandemic, but I do think that was one of the positives, is that it was very eye-opening for organizations to see their capabilities of doing things virtually versus things that they had previously thought would only be able to be done on site. So again, I'll kind of speed through this, but this is just some internal audit considerations in regards to fraud. Your internal auditors can help you with assessing any sort of whistleblower complaints. They can go in and do a deep dive into the process that's affected, look at the governance structure and identify any vulnerabilities or potential weaknesses in internal control or segregation of duty. They can also evaluate your fraud procedures over your banking internal controls, if you have positive pay or ACH block, and if those are actually being utilized properly. They can perform spot checks over significant processes, which works not only one to verify that processes are being performed in accordance with internal controls, but also it serves as a fraud deterrent, because if you do have an individual at your organization who's considering committing some sort of fraud, the fact that you do spot checks, the fact that they have that in the back of their mind that they could potentially be selected at random, it just serves as a deterrent against anyone who might even be contemplating the idea of doing something like this.
So Mac, I think we have like 3 minutes left. Okay. So I'm going to have to speed through this, but we obviously can use artificial intelligence, on our engagements. We actually use MindBridge, so there's data analytics. But I really want to get I know, Nathan, you're going to have to go through some slides here. Just skip to, okay, right here, your internal audit plan, when you put it together, I want it to have, you know, just like you have a risk universe, I want you to try to think of not just financial, not just compliance, right? We want to have a well-rounded internal audit plan. You may want to figure out what your top risks are, spread out a 3-year plan based on your highest, medium, and low, and then rotate. Try to go from there depending on your budget. So let's go to the next here. I think we have a polling question. So what model for internal audit is at your organization? Is it in-house, co-sourced, outsourced, or unsure? I think there's a CPE word possibly, Mac.
Sorry, no, we are actually all
Oh, okay.
CPE words. There is no fourth CPE word. So if you have
Okay.
have all 3 of those, then you're good to go.
Okay. All right. So mostly, mostly in-house currently. So we're gonna talk you through that. So we're gonna keep going here to the next. Yeah, mostly everyone has been in-house. So if you can keep going through here. Okay. Right. Good. Let's stop here. So the previous slide, which everyone will get the slides, and I know we only have a couple minutes left. So once you've identified from your risk universe, okay, what your top risks are, talent management, that could mean a lot to a lot of different people. So I want you to think about what can go wrong in that scenario. And from that question, and this is how you do a risk-based audit, you figure out your objectives. So that's how helps you design your audit. So this could be the example of a 1-year internal audit plan. This is just an example. Obviously, you'll need to look at your context, but you could say, you know, estimated number of hours that you would like to dedicate to this. Let's say, you know, I think and I've seen internal audit plans be about 1,000 hours. You know, it could be 500. Identify someone in your organization, if you don't have internal audit, to maybe co-source from staff all the way to manager, maybe even a board of directors. Give them a set amount of hours. I'd like you to spend about 100 hours on, you know, cash and pledges receivable. And we thought about what could go wrong, and we really want you to look to make sure there's segregation of duties and this and that, and report back to us. That's it, in a report. That's how you've been able to provide yourself with assurance that, you know, that is doing well. So now for significant areas like cyber, you may not consider that as part of your internal audit. You may be, you know, having an external firm do that, but really it's kind of like you're outsourcing that. You're still providing management with assurance. So for different areas where you're getting assurance, you can have some of it be done in-house, some of it be outsourced. And so we're typically seeing cyber be outsourced, or maybe looking at your strategy could be outsourced. You can go ahead to the next slide. So, and I know we're running out of time here, but wanted to give you some of the takeaways. These are what we're seeing as really the top risks right now that you should be thinking about. There's, for example, if you have a digital transformation happening, bring internal audit in, get some assurance on that process before it happens, pre-implementation as well as post-implementation. Look at your third parties, look at your talent, look at the fraud, and there's some interrelation between fraud and cyber. So if you just take a look at this slide, I think these should be spread out on your plan in 2021 in some respects. And I'm going to turn it over to Andreas. I know he had some comments he wanted to make before we ended it here.
Sure, thanks, Melissa. No, just, you know, you've talked about a couple of final thoughts there, but, you know, the organization just needs to identify what its risks are, develop plans for addressing those risks, you know, considering outsourcing internal audit to professionals, co-sourcing, because your internal solution may not always be the best solution. It really all depends on the organization and the strength you have within that organization. But and you know, of course, the audit committee, the risk committee, whoever's responsible for overseeing risk, certainly the lines of communication between internal auditor and the committee should be open. Certainly making sure that there is that open line of communication is important. And you know, there may be an opportunity for donors to come back and want to inquire about internal audit activities. You know, I guess what you would want to do there in that point, if they want to review the findings, you may want to have that discussion about how much you want to share with your donors. But certainly having the function in place is important, and ensuring that communication is there is critical. Prioritizing internal audit functions, you know, leveraging professionals, that's the key to success with internal audit. I know we've gone over time. Want to thank you all for coming today or joining today. And if you have any questions, don't ever hesitate to reach out to us. Our contact details are on the slides in front of you. And you can access our website for the live recording or the recorded version of this live webinar and with the PowerPoint that you have in front of you today as well. So thank you all very much and have a great day.
Andreas, this is Mike. Just one more thing. A couple people asked, how do they actually use the 3 words to get CPE?
So there will be an email sent out with the survey. It'll also have links to download the PowerPoint deck as well as the recording. So when you're going through that survey, you can put in those 3 CPE words and that'll be that. And then it'll send your certificate once you've completed that survey.
Okay, got it. So complete the survey. Thanks, Mac.
Yep, no problem.